welcome back to another episode of Being Money Smart. I'm your host, Augustia, and today we're diving right back into our ongoing conversation about gold. And there's a lot of happenings in the world of gold reserves, and I want to break it all down for you in a way that makes sense for our overseas audience. Let's start with the big news. The People's Bank of China has increased its gold holdings again in June 2025, and that's 8 months in a row of steady gold purchases, and starting all the way back in November 2024. By the end of June, the China Central Bank gold reserves hit 73.9 million ounces, or about 2,298.55 metric tons. That's an increase of 70,000 ounces, roughly 2.18 tons, compared to the May. These numbers come straight from the People's Bank of China and the World Gold Council. They show just how strong gold prices have stayed, and even though there was a bit of pullback in June. From a long-term perspective, the gold is still holding up really well. So what's driving this gold buying spree? There are a few major reasons. First, the global geopolitical and economic uncertainty. Ongoing conflicts like the war in the Middle East have kept the gold prices resilient. The gold is a classic safe haven when the world feels unstable. And the second is shift away from the U.S. assets. The central banks in developing countries, thinking China, India, Russia, and are moving away from US dollars and treasuries, which haven't been performing well. And instead, they are turning to gold and even Bitcoin, both of which stay strong in June. And third is strategic diversification. There is a growing recognition that relying too heavily on dollars assets isn't the best move anymore. The passage of the major US policies like the Big and Beautiful bills has only added to uncertainties and pushed more countries to diversify their reserves. Poland leads this back, and interestingly, the country has been the most aggressive in buying gold this year isn't China, it's Poland. Since the start of 2025, Poland's central bank has made the largest net increase in gold reserves worldwide. Other countries like the Czech Republic, Turkey, and several Central Asian nations have also boosted their gold holdings, although a couple of them trimmed their reserves in June. For Poland, the motivation is clear. The ongoing Russia and Ukraine war has made the threat feel very close to home, so they're moving very quickly to sell US assets and buy gold. It's not just Europe and Asia getting on this action, and in June, some emerging African countries like Uganda, Rwanda, and Madagascar also started buying more gold. Overall, central banks around the world are now net buyers of gold, meaning there's a clear trend of more gold flowing into reserves than out. When you look at the global ranking, the US still holds the most gold, with the IMF in the third place. Among the developing countries, Russia is at the top, just ahead of China, followed by Switzerland, India, Japan, and cultural appreciation for gold is especially strong in Asia and Eurasia, which helps explain why those countries rank so high. One thing to note about China's approach, the central bank tends to buy more gold when the prices dip. From May to June, as gold prices dropped a little bit, and China actually increased its gold purchases. And it's a smart move. Buying more when the prices are favorable, and if prices drop further, you can bet they will buy even more. If you're thinking about investing in gold, following central banks isn't a bad strategy. With all the geopolitical and economic uncertainty, the gold appeals as a safe long-term investment. It's only growing. Even Bitcoin has remained strong, hovering above $100,000, thanks in part to official recognition and new regulations supporting digital currencies. And public blockchain like the Ethereum and the Solana haven't seen the same level of acceptance, and their prices have been more volatile. The key takeaway with digital currencies, especially the Bitcoin, is that once they gain broad recognition, their value can really take off, similar to gold. But remember, the gold has a much longer track record as a store of value. You might be wondering why countries like Uzbekistan and Kazakhstan has actually reduced their gold holdings in June. These nations are major gold producers, and gold makes up the huge part of their foreign exchange reserves. To avoid putting all their eggs in one basket and to keep the liquidity high, they adjust their gold-to-asset ratios from time to time. And sometimes when their economies or currencies face pressure, they sell off a bit of gold to stabilize things. It's just smart, flexible reserve management, not a sign of trouble. Gold prices can swing pretty dramatically day to day. For example, some investors saw gold peak at over 820 RMB per gram and then drop around 700. Trying to time the market for short-term gains can be risky, and many who tried ended up losing money. The best approach? Buy gold, ignore the daily price swings, and keep investing regularly for the long haul. According to the Gold World Council survey, the main reasons central banks are increasing their gold reserves this year are geopolitical risks, diversification away from dollar, and inflation hedging. Hoping 43% of central banks plan to boost their gold reserves in next year, with emerging markets leading the charge. And developed markets also really have the big reserves and are often more tied to the US. But emerging economies want assets that can withstand inflation and uncertainty. Poland has been the world's top gold buyer since the Russia-Ukraine war began in 2023. In 2025, Poland leads, followed by China, Kazakhstan, and Czech Republic. On the flip side, India, Uzbekistan, Singapore, Kyrgyzstan have reduced their reserves, but most countries remain bullish on gold. Despite some short-term dips, the gold prices have been on the tier. The Nasdaq, S&P 500, Dow Jones have all bounded from early year drops and are trending upwards. Gold prices expected to stay high for the rest of the year, supported by inflation, ongoing wars, and major policy shifts in the US. If you're looking to buy gold now, that's a good time as any, especially if you plan to build up your holdings over time. Okay, that's it for today's episode. We covered the latest central bank gold buying trends, the reason behind them, and what it all means for investors like you. Remember, the gold isn't a get-rich-quick scheme, but it's a solid long-term play, especially in today's uncertain world. If you enjoyed today's episode, don't forget to subscribe to our channel. Your support helps us keep bringing you the latest insights and analysis on global finance and investing. Hit the subscribe button, leave us a review, and share this episode with your friends. Thanks for listening, and I will catch you next time.